Welcome everyone to the deep dive. Today we're really getting into something fascinating in the algorithmic trading space. We're looking at a specific AI-powered system, the UBEQMEN bot, built for the MT5 platform. Our goal here is to really unpack the materials we've got, understand how this bot claims to give traders, an unfair edge across different markets. We'll pull out the key nuggets so you get a clear picture of its mechanics, its strategies, and how it works in practice.
Absolutely. And what's really key here, I think, isn't just price prediction. We'll see how this bot is designed to detect the context of the market. That's something many traditional algos miss. It's really about understanding the environment, not just guessing the next tick.
Okay, let's dive in then. So fundamentally, what is the UBEQMEN bot? It's described as this AI system for MT5, and they make a big point about compatibility, right? Their motto seems to be one bot, any platform, any market.
That sounds ambitious. It is. And that versatility is definitely a selling point. It's designed to work across, well, a whole range of markets. We're talking Forex, indices, metals, commodities, futures, even crypto. And crucially, it should work with pretty much any broker that gives you MT5 access. Real accounts, demo accounts, doesn't matter.
All right, so versatility is covered, but what makes it tick? The sources talk about its brain being a combo of a high-frequency trading engine, HFT, and AI, and they use this term regime detection. Can you break that down? Is that something it's trying to figure out what kind of market it's in?
Exactly. That's the core innovation, really. Yeah. It's not just about price direction. It's about detecting the context. The claim is it spots the conditions that will trip up most algorithms. Think about it, is the market ranging to bouncing around, or is it strongly trending? That's the range versus trend distinction.
Yeah.
And it does this in real time using metrics like compression, how tight prices are, acceleration, how fast they're moving, things like ATR, even hourly cycles. This lets it automatically switch its approach.
Yeah.
So it might AFE in range, that's counter-trending, like a snake, they say.
Right.
Or it will go within trend, like a bull or bear, riding the momentum. It even factors in specific times, hot hours like market opens, closes, news events. So yeah, it's trying to read the room, not just the chart.
That makes sense, reading the room. And beyond this core engine, there seem to be some user-friendly aspects too, like the Copilot feature. It mentions natural language processing, so you can actually ask the bot things like, should I hedge or adjust my TPSL?
Yeah, that's the idea. To make it more intuitive, less like programming and more like interacting with an assistant,
Right.
You could ask, what's my current risk? And it should understand. And that's paired with what they describe as a clean, live GI, a graphical user interface.
Okay, what does that show you?
Things like drag and resize panels, logs showing the AI's decisions, your real-time P&L, signals, order, blocks those important price zones. It's all about giving you clear, immediate feedback on what the bot is seeing and doing.
Got it. So we have the HFT brain, the AI context detection, the user interface. Then there's this secret weapon mentioned, the microflow plus volatility radar system. It comes with all licenses, apparently, and it's supposed to give this unfair edge. What is that?
Ah, right. This is supposed to be the real differentiator. Think of it as getting a look under the hood of the market in real time. It combines ultra-short-term heat maps with microflow. That's like the raw uptick, downtick pressure.
Okay, so what does that let you do?
Well, the claim is you can see the pressure of volatility mounting before it really shows up on the chart. You can watch the order flow reverse in microseconds. You might even hit the impulse before the candle prints. It's like giving you X-ray vision into the immediate buy-sell battle. That's the unfair edge part, seeing it before others do.
X-ray vision. Interesting. So how does the bot use all this, the context, the microflow, to actually understand what's happening? The sources mention signatures, repeatable patterns.
Yes, exactly. It's trained to recognize 4 key market signatures. First is ignition after calm. That's when volatility suddenly spikes and microflow cascades in one direction, a potential start of a new move.
Okay.
Second, trend grind plus pullbacks. Here, volatility is high but steady. The market keeps pushing, maybe with small dips, but the direction holds. Third, exhaustion cool down. This is after a big move. Volatility peaks, then drops, and the microflow shows the momentum fading, a possible reversal point. And fourth, mid-session drift. Low volatility, microflow just chopping back and forth. Basically an uncertain sideways market to be cautious in.
And it uses thresholds too, right? Like quick rules to decide if conditions are right. How does it gauge hot versus cold volatility, for example?
Right, mechanically it needs rules. So for hot T-vol, it looks at the average true range, the ATR. If it's above a certain level, like the 65th percentile of recent bars, or just numerically high, say 6.5 or more on the scale they use, then conditions are ripe for big moves.
And cold.
That's the opposite. If the ATR measure is really low, maybe 3.5 or less, it signals a drifting market, and the bot knows breakouts are less likely to work then. It also looks for a microflow burst. That's a sudden, strong agreement in buying or selling pressure across the very shortest time frames, like the last couple of seconds.
Signaling immediate momentum.
Exactly. And alignment is similar, just seeing that pressure line up across slightly longer microframes, like 1 second, 5 seconds, maybe 10 seconds, joining in. Confirmation. There's also a context lock. If the, say, 30-second flow is strongly against your intended trade direction for a while, it tells the bot, don't fight this. No new entries against that pressure. Optionally, there's even a flow score, basically a weighted sum of the direction across these timeframes. If the score gets high enough, either positive or negative, it's another trigger for action.
Wow, okay, that's quite a layered approach to reading the market. So with all that input, what are the actual strategies it employs? The documents list 3 main ones using microflow and the volatility heat map. Let's start with ignition breakout.
Okay, ignition breakout. The core idea here is capturing the first wave. It's about getting in right when a new, potentially strong move is just starting. It looks for conditions where volatility is rapidly heating up and that microflow cascade we talked about is happening.
It's the very beginning of a push.
Precisely. The checklist includes things like, is the volatility gate on end? Is the short-term ATR rising? Is microflow aligned? Is price near the edge of its tiny recent range? If yes, the entry might be buying the break of the micro high or selling the break of the micro low. Stop loss is kept tight, maybe based on that ATR, like 0.6 times the ATR 10. And you manage it by holding while the immediate flow stays with you, maybe taking partial profits, trailing the stop.
Got it. Capturing the initial burst. What about the second one? Pullback reload. Sounds like it's for ongoing moves.
It's exactly right. Pullback reload is about surfing the grind. You know how strong trends often take little breathers, little pullbacks before continuing?
Sure.
This strategy targets those moments. It works when volatility is already high and stable, and the longer-term context, like the 30-second flow, is still holding the trend. The checklist looks for volatility still on, ATR stable or rising, the longer flow intact, and crucially is the very short-term flow, like the 1 second, flipping back in line with the trend after a brief pause.
Ah, re-engaging with the trend.
Yes. Entry could be when the 1s and 5s realign, or maybe on a break of the little pullback structure. Stop might go under the pullback base, perhaps 0.5 times ATR 10. You might add to the position if the 10-second flow confirms, and trail the stop to lock in gains as it moves.
Makes sense. Riding the wave after a pause. And the third one, exhaustion fade. This sounds like going against the grain.
It is. It's described as a controlled counter-trend move. Says, yeah. The insight here is spotting when a strong move seems to be running out of steam, and a temporary reversal is likely. This typically happens after volatility has peaked and starts to cool down, and the microflow shows opposing pressure that isn't getting absorbed easily.
So signs of the move failing.
Right. The checklist includes, is the short-term ATR dropping? Are the 1s and 5s flows opposing the recent move? Is the 10s flow softening? Did price just spike into a key level and form a rejection wick? If you see that, the entry is to fade the move trade against it, maybe when price reclaims a level or makes the first low or high if fading a rally, or higher low if fading a drop. Stop loss has to be very tight, just beyond the extreme point, maybe 0.4 times ATR 10. Targets are usually quick, like back to a micro level or VWAP.
Okay, 3 distinct strategies for different phases. Now, this seems really important. The source material has a whole section on when not to trade. It says, knowing this saves the most money. Why is that so crucial?
Oh, absolutely critical. Because no system works all the time. Trading when conditions aren't right is just, well, it's burning capital.
Yeah.
The bot is specifically designed to sit out when, for instance, all the volatility lines are really low, say under 3 or 4 on their scale, and the microflow is just messy, flipping back and forth randomly. That's chop. Stay out.
Right. Unpredictable.
Exactly. Also, remember that context lock. If the 30-second flow is firmly against you for, say, 3 or more columns on their display, you don't take new entries against that flow. Respect the slightly bigger picture. And one more. After a really extreme late session volatility spike like the long-term ATR hitting the 90th percentile or higher, be very wary of chasing new breakouts. The odds favor waiting for a pullback or even a fade at that point. Late moves often reverse sharply.
That's really valuable wisdom, knowing when to hold back. Now, for putting this into practice, they mention session presets, like for the U.S. Open.
Yeah, some quick starting points. For
Yeah.
the U.S. Open, say 15.30 to 16.30 CET, they suggest a P60 setting. That P refers to the volatility percentile filter.
Okay, P60 means...
It means the bot needs volatility to be at least in the 60th percentile of its recent range to be active.
Right.
Fairly aggressive for an active session. For midday, which can be slower, maybe P70, requiring higher relative volatility and stricter alignment because moves might be less reliable. And for the power hour, say 21.00 to 22.00 CET, maybe P65. But, and this is key, if the long-term ATR, like ATR 80, is extremely high, P90 plus old, avoid fresh breakouts then. Wait for pullbacks.
Got it. Presets as starting points. And how quick is setup? They mention a 5-minute start. Is it really that fast?
Apparently it's designed to be. You install the files, the EA, and any indicators into the right MT5 folders. Restart MT5. Make sure algo trading is enabled, allow any DLL imports if needed. Then you just drag the EA onto a chart. M1 timeframe is often recommended for this kind of scalping. Define your risk settings. Maybe start with 1.1 TPSL, set it to auto mode, let the AI handle the strategy switching, and then crucially activate those microflow and volatility radar overlays on your chart. That's your X-ray vision.
Okay, seems straightforward enough. Let's
Yeah.
talk safety nets, risk management. Even with fancy AI, you need rules, right?
Absolutely non-negotiable. The principles here are simple but robust. Default TPSL of 1.1, aiming for a statistical edge rather than home runs. The stop loss isn't fixed in pips. It's calibrated by the current ATR, maybe 0.4x, 0.5x, 0.6x ATR, depending on the strategy, so it adapts to volatility.
All right.
Yeah. Then there's a daily loss cap. Hit that limit, the bot stops trading for the day, protects your capital. Also a kill switch after a certain number of consecutive losses. Good for breaking negative psychological loops. It also uses dynamic position sizing based on volatility, potentially smaller sizes in chop, larger in clear trends. And a final rule, never chase trades right after major news if the volatility is actually cold. That can be a trap.
Good. Solid risk principles. Now, the source does give a glimpse of potential results. What did they show?
They included a couple of examples. One was for a SolUSD Solana on the M1 chart, running fully automated. It showed a win rate around 61.7% over more than 3,000 trades, profit factor of 1.41, net profit about $713, and importantly, a very small max drawdown, just 0.56%. There was even a long winning streak mentioned.
Okay, interesting. And another one.
Yes, an example in the DAX, the German index, traded live. It showed roughly an 8% gain in about an hour of scalping. They noted fluid execution and, again, contained drawdown.
But these come with a big asterisk, right?
Huge asterisk, yes. These numbers are just illustrations of how the bot behaved in very specific real market conditions. It's crucial to understand. Your results will absolutely depend on the instrument you trade, your specific broker, their fees, slippage, the market volatility when you trade, and the parameters you set. No guarantees.
So the advice is...
Test it thoroughly in demo first. Get comfortable, understand its behavior. Then, if you go live, deploy progressively. Start small, scale up cautiously only when you're confident.
Very sensible advice. Let's quickly run through some FAQs mentioned in the source. Does it work with any broker?
Basically, yes, if they offer MT5 and have a decent quality data feed. Feed quality matters for this kind of strategy.
Do you have to manually choose between FAE and go with?
No, the AI handles the switch automatically based on its regime detection, though apparently you can force it into one mode if you want to override it.
And are those microflow and volatility overlays essential for the bot to run?
The bot itself will run without them on your chart, but the overlays are what give you that X-ray vision. They provide the crucial visual confirmation and allow you to potentially filter trades better or even manage them manually with more insight. Highly recommended, it seems.
Okay. And final FAQ. Does it need constant optimization, like curve fitting?
The developers seem to advise against heavy optimization or overfitting. Start with the defaults. Then maybe tweak the risk settings or the volatility filters, like those P levels, to suit the specific asset or session you're trading, but not constant re-optimizing. So if we had to boil it right down, the TLDR from the source material is kind of neat, actually, to use a bit of French. La vol vous dit quand vous devez vous intéresser, which means volatility tells you when to pay attention.
Okay.
And then microflow vous dit quand cliquer. Microflow tells you when to click the button.
When to act. So volatility for when to look, microflow for the trigger.
Pretty much sums it up.
And just to recap those core strategies again: ignition for the first wave, catching the start; reload for the grind, rejoining trends; and fade only if cooldown plus flow opposé controlled counter trends when momentum clearly shifts. Plus, that core idea. The heat map will give you an X-ray vision of the next candle. That's the edge it claims to offer. Well, we've certainly peeled back the layers on a really detailed and quite sophisticated AI trading system here, from detecting market context in real time to these very specific strategies driven by microflow and volatility. It's definitely advanced stuff.
It really is. And, considering how precisely an AI like this aims to read market signatures and
Yeah.
trade with this X-ray vision, does make you think, does it? What does this mean for, say, traditional technical analysis or even human intuition in these fast markets? What kind of new skills might traders need to develop to really thrive or even just compete in a landscape that's increasingly shaped by these kinds of powerful algorithmic tools? It's something to ponder.